Have you ever been investing in real estate and gotten to a certain point where suddenly you've run out of money, but you want to keep growing? You want to keep building that portfolio. At some point in time, it happens to all of us. And the only thing you can do there is to learn to start raising capital. But it's not as easy as people think. A lot of people go out and they find the deal, they get this great cash flow, this great return on investment. And then suddenly there's nobody there to invest with you. Well, we're going to change that today. And I've got a great speaker who's joining us who's going to help us learn how we can build trust and credibility before we start looking for deals. And to help me do that, today I'm joined by Debbie Balfour. Debbie is a real estate investing coach, and she's the host of the Let's Talk Real Estate Investing podcast. Debbie helps investors get clear on their strategy, build their credibility, and raise capital in a way that builds trust and attracts the right partners. So help me welcome Debbie Balfour. Debbie, welcome to the podcast.
Thank you so much, Cam, for having me here. I'm really excited to be here.
Now, Debbie, you've been investing in real estate for a number of years now, and you've built up a reputation as somebody that is trustworthy to put their capital in with, that helps build returns for people the right way. And you've done it in a way now that you're starting to coach. But I want to start kind of a little bit towards the beginning. How did you get into real estate investing, and what led you to focus so heavily on raising capital?
So I first got into real estate investing because when I hit like 50 years old, I realized that I had 15 years before I retired. And when I looked at what I had in my bank account and what I had put away in my registered funds, I felt that I would be poor when I retired. And at the same time, I was like, oh no, I still have 15 years to work. Oh, I don't know if I can continue working for another 15 years. So that's what pushed me to look for something different. And real estate investing had always been calling to me. I just didn't know how to do it. So I got myself the right training, got into a community, and just got going. And within the first 2 years, I had purchased about nine properties.
Wow.
Yeah.
That's pretty incredible. But at one point in time, with 9 properties then, you probably ran into that issue that a lot of investors who are building larger portfolios run into, which is a lack of capital to continue, right? And so talk to me about, like, what was it like starting to raise capital? What did you start to do in order to attract that capital to you for your next ventures?
So, right away, because of my corporate background, I never had this fear of getting on calls, etc. So, I did as soon as I got into real estate investing, I wanted to learn from other people, but I didn't know like which markets should I be in? What's the best places? How do I know it's a good market? So I thought, why not reach out to investors that are in that market and find out more? Because I didn't know like what to Google. How do I find out all this information? So I thought, well, I'm just going to do it the easy way and go to the people who had already done it and find out why are they in that market? What is it good for? And I thought, as I'm talking to these people, why don't I get them on a Zoom call with invite other people to join us and also broadcast it live? So
Mhm.
that's something I did naturally. I wasn't thinking at the time about the fact that I was building my reputation, my credibility, etc.
Right.
I just thought, here's an opportunity to give back to other people that would be feeling the same way. But that was a good thing because it got me out there and known very quickly. So that was one of the good things that I did. So yeah, like you said, as building up properties after 5 properties, Scotiabank says, "That's it. I'm not giving
Yeah.
you any more." And so, I had learned all about other people's money and how to help other people and also build and be able to scale. So I started to talk to other people about it, but I was feeling really salesy, like I was a used car salesman, because I was just like pitching. I would do these real pitches, and people would just like you'd see these glazed looks over their eyes, and it wasn't me because I'm the building reputation person, I'm the building relationships person, but yet
Yeah.
I was here pitching. And then one day I went for a walk with my friend, and I hadn't told my family and my friends for a very long time what I was doing because I didn't want that negativity that you get,
Mhm.
that they're trying to protect you, but they don't know what they're talking about.
Of course, yeah.
So I didn't tell. So I was walking with my friend and I started to tell her a bit about what I was doing. Nowhere did I think she was going to invest with me, but I was just
And
talking about stuff.
yeah, and you know, sometimes that's the interesting thing. Like we do sometimes have that almost limiting belief that we want to protect the people. We don't want to tell them because we're scared they're going to tell us no, but then
Yeah.
they might be the ones who might invest with us because they see value in you of because they know who you are,
Definitely. But I wasn't pitching to her because she was not in my eyes, my ideal client. I was
right?
just walking, we were catching up and we were talking about stuff. And she was like, I want to make money while I sleep. When can Matthew and I come over and talk to you about this? And that was it. Right. And
Mhm.
then I started to realize this could be like, why was that so different to the conversation, to other conversations I had where I was pitching people and there were good deals and I was saying, like, come in, I've got something already running, all those things, like it was good returns, and yet they weren't signing up for this.
Right.
And
Yeah.
it was because she was someone that knew me, trusted me. We had a long relationship.
Yeah.
She loved what I do. She trusts that she's seen that everything that I've done, I've been successful at, and she just naturally invested with me. So that was one,
Yeah,
right?
that's the big thing is because she trusted you, because you had that relationship. And I believe that's where you are taking the concept of raising capital and really focusing on the right steps in that building trust and credibility factor, because you realized how easy it was to invest with someone that already knew, like, and trusted you, and how difficult it was to invest with strangers, even though they understood investing in real estate. They
Exactly.
also didn't have that trust factor built in yet, right?
Yes, definitely. So people, it doesn't matter how many numbers and how great the numbers are that you're showing them. I think what happens is it's like just this glazed, like deer in the headlights, like blank look comes in, and they don't really want to hear.
Yes.
So they just blank it out because they're already thinking, I don't know this person. What's the although
Yeah.
people had already, but people had known me. They knew me from all the value that I was giving, but I hadn't established myself from that perspective for the raising capital side. I have another one where again I was talking to another real estate investor. We were actually partners. I was his financial partner,
Mhm.
and we were just catching up again on things that we were doing, and just our normal check in, have a chat. And then I mentioned that but I bought this place in Peachland, and I was thinking that I was going to renovate it, and I thought I would go out there and get some private lending in order to do the renovations. And he says, "Oh, how much are you looking for? And, what kind of returns are you offering?" And I told him, and he goes, "Oh, my mom would be interested in that." And that was it. That was like
Oh,
one conversation again, right? Again, with someone that knew, liked, and trust me, that
yeah.
I had built a relationship with. I had the opposite happen when I had amazing opportunity. This piece of land, large piece of land, really good price that we were getting for it. What we were going to build was amazing. The returns were going to be great. Uh, it was a $6 million project, and I was all excited. We were doing these things, and then the thought that I had to raise capital for that sent me into panic mode, absolute panic mode, right?
Right.
And I had like over 2,000 followers on Facebook. I had 2,000 plus on LinkedIn. I built my reputation, but I didn't know who to go
Right.
to raise this capital. I didn't know, of all those people that I had, who would actually want to invest in something like this, who had
Mhm.
money to invest in something like this. So
Well, and especially
that
with these types of deals too, the numbers are bigger, so the innate fear that we start to put in ourselves starts to come out because when you're buying a condo and you're talking about 60, 70, $80,000, it's a lot different than when we're talking $6 million and having to raise
exactly.
hundreds of thousands of dollars, right? And that becomes suddenly the mental fear that we put in ourselves that's not necessarily about the deal or the numbers, it's just the sheer volume. And when it's your first time doing it, it's mentally draining to think,
It
where am
is.
I gonna get this money from?
And you know you have to get way more investors, so it's not like just the one person I need to talk to.
Mhm.
And so that's another part of it too that I want people to understand. So even just like getting out there and getting visible, I had all of that. But what I didn't have was a system for
Right,
all those people to figure out like who would actually be interested in something like this, who would actually be qualified to do something like this, who would want to do be in this kind of thing. So guess what, we spent $67,000 to do due diligence on this piece of land, only for me to walk away from it because I had
yeah.
no investors.
Right. And that's the tricky part because again, you hit that nail on the head and having that system like when you've got a large deal like this, you got to segment your list, you got to understand who's got what appetite for investing, who's got what capital available. Like it's not just necessarily about you having a good relationship either. Like you need to go to the right people. Some people
Mhm.
don't have the risk tolerance for these larger deals, and if you
Exactly.
start pitching them on these types of deals, you then immediately lose the credibility because you should know in advance based on, you're tracking your systems. This person's not the type of person who would go in on a deal like this. Like I maybe have to cater to them on something else. And I think that's really interesting because it kind of leads me into my next question. Like when you first got around to like investors and raising capital and joint ventures, what do you believe now about raising capital that you realized was wrong in the past that you were doing?
Well, the biggest thing was I was busy focusing on getting the deals. I thought the
Right.
deals were important. If I had the right deal and the right numbers, how showing people all this great ROI, that was all I needed.
Right.
And it's totally backwards
Yeah.
because I needed to actually build visibility, credibility, and trust first, and the systems that what we just talked about to understand
Mhm.
who is actually an accredited investor that would be able to invest in this versus, who is just like a JV partner type of
Yeah.
person. Like having those systems in place, uh, I didn't have any of that, and we need to have that. So you can see you can spend lots of time and money on finding the deals, doing the due diligence, but it can all be lost because you
Yes.
don't actually have people in a pipeline ready to invest in those. So for me, I think that we've been doing it backwards, and a lot of people are teaching this backwards. They're focusing on the pitches, on the ROI, and how to set up the deals properly. But that building credibility and trust comes long before the actual deal
Yes.
arrives.
Absolutely. Yeah, I think that's important because, you hear a lot of times, and I mean, I've had coaches and mentors of mine say, if the ROI is good enough, the money will be there. And at the same time, if you haven't built that list of people with money, with the capacity to invest, in your situation, like losing 60, you said 67,000, I think?
$1,000, yeah.
Yeah, $67,000 is a huge amount of money to walk away from a deal. I mean, the average per that's a down payment for the average investor on a property these days, right? So, not having that system, like, yeah, the ROI could be fantastic, but if you haven't built that credibility, you haven't built that list of investors and segmented that list of who's ready to invest in that type of deal, that's a lot of money that you are outputting and being at risk if you can't end up funding that deal. And I think it's very important to do exactly what you said. Like, a lot of people are out there and I hear all the time just write up offers, write up offers, write up offers and find money. And that's fine. You can definitely do that. However, there's going to be a lot of time where you're going to lose credibility with your vendor partners like your realtors and your mortgage brokers if you're constantly putting these
Mhm.
deals in and collapsing them because you haven't built a system on the other end to raise capital and be able to fund these deals. Nothing's no one, no vendor out there wants to sit there and show you 50 different properties, write on 20 of them and not get a single one under contract, right?
Exactly.
So So you're almost losing credibility more than just with investors in that case when you're not prepared, you're not doing the steps necessary. And you can do both at tandem, but you need to put a little bit more effort in that building credibility and relationship aspect as well.
And for new investors, this is where I hear all the time, "Oh, Debbie, I don't need to go on social media as yet because I don't have a deal. I don't have anything to share with anyone." Well, give me 20 minutes with someone and I'll tell you 30 things that you're able to share
Yeah,
with
exactly.
people that without having experienced as yet. So that is so the new investor is the actually ideal spot to start because people can watch your journey. You can build your
Absolutely.
reputation as you're learning, as you're going along, but you can start building that right like I did. Like I started right at the beginning by just sharing what I was learning from others and
Yep.
using OPC, other people's credibility.
Well, and we actually had a great discussion on your podcast about why investors need to be using social media now. It is a business tool that can help you build that credibility. And I love what you said too about just sharing your story, sharing your learning journey, because I think that builds more credibility than immediately coming out as an expert, right? As soon as you come out, you've got no credibility, you've got no experience, but you start saying you're an investment expert because you took like a couple of like online courses, people are going to see right through that. Whereas if you come out right out of the gate and say, "Hey, I'm building my investment journey here. This is how I'm learning. This is how I'm studying." I would relate this similar back to a story of mine where I raised my first, JV partnership deal. Was I was taking a bunch of courses and learning. Now we didn't really have social media to the extent that we have it today. Like back then, people had Facebook, but really Facebook was just sharing like what's going on with you and your friends. But I was talking nonstop about what I was learning within like my job and my family. And my first JV partner was actually one of the supervisors at the swimming pool that I worked at. She saw the passion, she saw me learning, and she said, "Hey, my husband and I, we just tried to do a flip. We don't think we did it that great. We can see you taking all this education. We've got some capital we'd like to invest from our HELOC into your next deal." And that was my first joint venture partner. So it's the same thing, but now you have social media that you can broadcast that at a greater level. And by sharing your journey, sharing your learning, you are going to build that credibility over time. And it could lead to investors saying, "Hey, I've been watching you for a year, 2 years. It could take a while, but suddenly you have that deal, you've built that credibility with that person online, and then they'll finally reach out and want to invest with you. And you never know, that could be your biggest investor you've ever had."
Yeah, and like it or not, social media is not going away. Social media is our way to connect today. And anybody, even when you go to a networking event live, what are they going to go back home and do? They're going to look you up to check
Absolutely.
on your credibility. Is this person
Yep.
who they say they are? Now, if you're not on social media, you may be have an amazing track record, but if people can't find you on social media, they don't think that you're authentic. They don't think that you have the experience you're saying, which is, I know it's wrong, but it is the way it is today. My son, I'm trying to connect him with someone that says to help him build his business. And he right away says, "Who's that person?" He looks him up. He says, "He's nowhere on social media. I'm not going to spend my time. My
Yep.
time is very precious sitting with him for him to talk to me about stuff that I don't know that he's actually qualified to speak to me about."
Yeah, no, I hear you, and I think the interesting thing too, I got a chance to listen to Gary Vaynerchuk up on stage just about a week and a half ago, and what's very interesting is that we're on a precipice of where social media is right now. It's no longer social media; it's now interest media. So if people are interested in learning about investing, they're going to see your content. It's not like it was before. But two, the very interesting thing he said is we're only 5 to 7 years away before this free tool is basically pay only to play. And so right now we've got a 5 to 7 year window where you can build your audience, you can build your brand absolutely free, and instead of sitting there paying for media dollars or anything like that. But it is going to go away. We already see, like, you post a video anywhere and it's already suggesting that you pay to get more views already.
Yes.
So,
Boost, boost.
Boost, boost, boost. And so from that perspective, like if you're not on social now, like think about getting on it. Start putting a camera on, start talking about it. You'll build the skills. Like the other thing he said that I thought was brilliant was, people are so afraid about doing social media because I don't know how to do video. I don't know. Guess what? You didn't know how to drive, but you figured it out, right?
Yes,
You didn't know how
that
to walk, but you figured it out. So it's just, just get on it and just figure it out, right? There's so much tutorials out there nowadays. It's not like it's a skill that you have to build from scratch. You can learn it like literally you could learn how to shoot and edit a video in one day now with with the access to YouTube and tutorials and everything like that. So no, I agree with you 100%. Start putting putting your story out there and get people watching what you're doing, and the capital will start to come because you've built reputation and you've built credibility.
But
Now,
you have to
another
give
question I
value too,
yeah,
right? So it's
absolutely.
so, and I know that a lot of people are always saying, "Oh, well, I don't want to post because I don't want to feel boastful." It's not boastful if you're teaching, if you put
Yeah.
it in a way where you're teaching others.
I totally agree. Now, in a world where a lot of people are wanting to do these bigger deals, right? You just talked about doing a $6 million deal. And for some average newer investors, that seems unattainable, but yet they still want to start moving up to that realm. What do you think is the actual difference that makes somebody investable, that people actually want to invest with? What are some of the key traits that you would say that you need to project out there to build that credibility and become an investable person?
So the big thing is that I see people show up and they go, "Oh, um, I have this property under contract." And that's the first post that you see in a long time. Or I've
Mhm.
just closed on this deal. And that's the only deal, the only thing you see. What makes people investable is people being able to know that how you think, how you
Right.
do things,
Mhm.
that, understanding your thought process. That if something happens to an investment, that you are the person that's going to go out and solve that problem and remove those roadblocks. So being able to show that on social media is amazing because it's not often that people aren't right next to you as you work every single day.
Mhm. But
But
they can be
they can
with
be
social.
on social media by sharing your stories, by saying, and a lot of people only show their successes, and that doesn't make
Right.
you investable. It's
Yes.
actually showing where things went wrong and you were
Yeah,
able to overcome it.
I agree.
That's what
100%.
makes you investable. That's what makes you trustworthy. No one, like, all you get when you put a post up, "Oh, I've just closed on this," is, "Oh, congratulations, that's so great."
Yeah.
But that person is investable when that person can be trusted that I can give you my money and you're not at the first sight of a problem. I'm not going to like worry that my money is gone because I know you are willing to troubleshoot, to solve it, that you find different ways of moving forward, that you have multiple strategies, and that your thought process is always around risk mitigation.
I like that, the risk mitigation as well, because I think that's a big key component of taking someone's money is how are you gonna like, you have to be prepared to show them that you're gonna treat their money better than your own because they are putting that trust in you. Sometimes it is their literal life savings that they're investing in you. And if you can't show how you're going to do that risk mitigation, how you're going to actually treat their money so that you can generate that return for them, return of capital and a return on investment, then you're not necessarily going to show that confidence that they're not going to see the confidence in you that you're going to be able to do that if you're not going to show the good and the bad. And I almost relate this back for my realtors who listen to this podcast as well. It's no different than go onto Instagram and all you see is just listed, just sold, right? The just listed, just sold, just listed, just sold. There's nothing in between about how you market a property, how you've actually helped the sellers, helped the buyers buy the property. You haven't taken anyone through the journey. And so it's the same thing on both of those coins. Like you can't just post beginning and end results. You got to show that in between. And I think you hit the nail on the head. Now, what are some of the biggest mistakes that you're seeing newer investors make right now when they're starting to raise capital or starting to pitch JV opportunities maybe too early?
Number one, they connect with you. I get this every day. I get a new connection, and right away, someone says, "Can I jump on a call with you and tell you about my deal?" So I equate this to I have this story that I say is you're walking down the street and there's this red beautiful red new Ferrari that drives up, and there's this most gorgeous person you've ever seen in your life rolls down the window, well, not rolls down, but window comes
That's
down.
like, back in the
Yeah,
day, like the younger people listening don't know that reference. You push the button and the window goes down.
and says, "You're exactly the person I'm looking for. Will you marry me?" People laugh at that. Of course, you won't marry that person, right? You won't say yes. But that's what investors are doing every day when they pitch a deal with to someone that they have no relationship with.
Yes.
That's exactly, and that is the biggest thing that I see. And then the other ones is that they secure the deals or they put things on under conditional offer, and that's the first and only post they've put on social media for a very long time. And they've put
Mhm.
conditional offer and they put looking for investors,
Right.
right? All they're going to get is, oh, congratulations, that's great. But
Yeah.
nobody is actually going to reach out to them to say, I'm interested in this, because they have not told me, where is that building? What's the market? Why is that a good market to invest in? What's the due diligence you did on this? All of that story behind this property isn't there. So why would I want to jump in and invest with you? Even if I know you,
Yeah. Yeah.
even if I
I hear
know
you.
you, I story.
And it goes back to a basic principle that we tell all the time on in the realtor side of things, but this is 100% translatable. It's social media in general. Facts tell, but stories sell, right? If you want to sell an investor in making you like investing with you, you have to share that story, share the due diligence story, how you came up to this point. If you just share some of the latent facts, okay, this much capital is required, this is going to be the ROI. Well, how did you get up to that point, right? Share that story, build that credibility through storytelling through your audience, whether it's face to face, whether it's on Zoom, or whether it's through social media. You can't just go straight into here's how much money it's going to require, here much money it's going to take. How did you come up with that, right?
Yeah. What people need to understand is people don't invest in the deal. They invest in people first, then the
Mhm.
numbers after. So it's just like say you're my friend Matt Cam, and you're just starting out being a realtor, right?
Yeah.
Maybe there's somebody else that's got like 10 years of experience. They've sold so many houses, etc. But I would more likely go with you as my realtor, and you have no experience, than I would with this stranger that says that's sold this many houses, because I have that know, like, and trust. It's the same thing. The deals may
Yeah.
not be, you may not be giving as much ROI as someone else, but if you have built that relationship, people will go with you before the person with the huge amount of ROIs, because how can they trust that person's projections? They don't know them, right?
Exactly.
But they trust you because they know you. They know your value system. They know, everything about you. So
Yeah.
that's the difference there.
All right, so Debbie, I'm one of your coaching students right now. I'm looking to raise my first dollar in investment capital. What should I start doing right now? Like, I am green, green, green. I've never raised a dollar in my life. I haven't even sold like Girl Guide cookies or like chocolates or anything like that. What is the first thing that you tell your coaching students that they should start to what like how do we get started? Where can I find that first dollar that I'm going to raise?
So the first thing you need to do is understand truly what your strategy is. What
Mhm.
is it that you do? You need to understand that clearly. And I don't mean I do buy and holds. I mean, where's those buy and holds? Is it multifamily? Is it single detached? Is it a condo? How do you finance it? What's your financing structure? I mean, everything becomes that strategy. So you need to figure that out first. That's the first
Right.
thing.
Yeah, yeah.
The second thing is then who, based on your strategy, when you close your eyes and you imagine your ideal client, what does that ideal client look like? How old are they? Where do they live? What's their income bracket? What do they value? What do they fear? What are their dreams? Understanding all of that. Those are the first things you need to know. because with all of that put together, that's your content for social
Yes.
media. That's your when you're speaking to people, that's your conversations. That's everything, because when you're speaking to people and you can speak to them and they feel that you understand them when you're speaking to them, when you're talking about, yeah, I totally understand you, that this is the way you feel. I was there too. This is what happened to me. You have those relatable stories. All of that flows.
Mhm.
When I was in corporate, I used to do process improvements. And we spent so much time on figuring out what the true problem was we were trying to solve, because it was most important to do that, because once you knew what the problem was, everything else just like flowed out of there. The solutions became natural. The same
Mhm.
thing I equate with this with raising capital. It's about understanding what your strategy is and what your who your ideal client is, their pain, their dreams, how do we define them, how old they are, etc. Because everything else after that becomes so much easier.
Yeah, I love that because here's the thing, like, if you start there and you start looking at this flip or this buy and hold, and then you're looking at a burr, you haven't really mastered one strategy. So before you start investing, like, I guess the number one thing is, like, you got to get educated yourself, right? You
Yes.
you you have to figure out, like, really understand truly, because when you want to speak to somebody who's going to ask you those hard questions, you need to be able to speak to it 100%. Like, this is why I'm investing in this strategy. This is why I invest in this area. So making sure that you take that time. And this is not one of those things where you spend 25 minutes and then make a decision and then start going out and looking for like, hey, I'm looking to do this. I'm looking to do this. Who wants to invest with me? Like, you got to put some serious thought behind it. You need to go and speak to other investors, learn from them. Because if you've never done this before, maybe you bought one property, or a lot of times a lot of investors are someone who upsized from a previous property and kept that one as a rental. They suddenly saw how good it was over the years for them. Then they decide they want to do more of this. They're not necessarily trained as an investor to start raising capital. So you got to go out and really dial in and understand, get that education, talk to somebody like Debbie and actually have some coaching to help you figure out your strategy that you're going to go forward.
Yeah,
So,
you need to. You really need to. And yeah, like you said, a lot of times, and I did this too, Cam, when I first started investing, because I just wanted to get going. So I did a joint venture partner with me as a financial partner, and then I did some. I bought some turnkey, and then I'm like, okay, I'm ready for some burrs, and I've done all these things, which is great as a coach because now I've got all this experience. But when I look back, was it the most efficient use of my time and money?
yeah,
Not necessarily. If I had drilled down and understand what I like, what I don't like, what my risk tolerance is, how much time do I have? How much money do I have? And then take that and then look at how the strategies that I'm learning from my real estate coaching and training that I'm getting aligns with who I am as an investor.
for sure. Now, obviously, you probably have some people who come into your training program and they have this idea that they do want to raise capital, but maybe they're not the right person to be raising capital. Maybe their job is going to be a little bit too restrictive to go out and find and put these deals together or what have you. So, how do you help someone kind of figure out whether they should be doing joint ventures, maybe just doing private lending? Maybe they're looking for some active deals, like they're doing flips, or they want more passive income, or maybe they're just looking to do something else entirely. How do you help guide them to figure out where they're at in their investing journey that way?
So that's exactly what it's basically an assessment that I go through, and they need to know the questions I ask is we figure out how much time do you
Mhm.
actually have, not how much you
Yeah.
think you have. So
Yes.
that's a matter of sitting down and breaking down, like, do I have children? Do they have activities? Am I volunteering? Am I doing like all these things, not just your job? Because sometimes we
Yes.
think, oh, we work 9 to 5 and then we've got all this. And no, you don't, because you've got
Yeah.
other commitments with that time. So how much time
Yep.
do you actually have? Because if you're going to do flips and you're going to do burrs,
Hmm.
you it means you need some time to be able to
Yes.
do that. And if you
You
don't
need
have
you
time,
need to
then
be
that
available for those emergency situations where you gotta go run to the property because a contractor maybe nicked some plumbing or something, or who knows, or a trade didn't show up and now the project's delayed, you gotta get your hands dirty. Like, yeah, the different strategies require different levels of
or
effort
if
and
you
time.
plan to do some hands-on yourself, like demo, ripping up
Mhm.
those carpets, etc., right? So those are the things. The same thing with how much money do you have? You go through and see how much money, like the bank of mom and dad, can I borrow from them? Um, do how many credit cards do I have? What's the limits on there? Do
Mhm.
I have registered funds? Am I willing to cash in those registered funds? All of those different things. If I'm going to go active, or if I'm, so we make a list of, again, go through everything financially, money that you can put together, and say, how much money do I realistically have?
Yeah.
And then we go through other things like, what do I like to do? You shouldn't be getting into real estate investing to replace your job by doing things you don't like. So you need to make a list of things that you like to do and a list of things that you don't like to do. And those strategies that you're looking at, you need to compare them. And maybe it doesn't dismiss the strategy, but it decides whether you're going to hire or partner for the things that you don't want to do yourself.
No, that I think I love what you just said there when it's like, don't replace your job with something else you don't like doing. People see it as a means to an end when then suddenly they hate it afterwards, right? I shouldn't have done this. I should have stuck with my job. And to be completely honest, like the if you are looking to replace your income with real estate, it's a lot harder than the average person thinks. Like if you're making, let's say, $125,000 a year, how much income do you need coming in? How many properties do you need to be able to replace that income? If you're investing in, let's say you're built like properties cash flowing 200 deals, how many $200 deals are you going to have to add up? Because you also have to think about when you're investing in real estate, it's not just about the $200 a month cash flow. That's not clear money. There's taxes on that. Then there's the fact that you might have a situation where, are you putting enough money aside? What if suddenly a roof leaks? What if a hot water tank goes on you? If you're just taking all that money to fund your lifestyle, you're not actually planning ahead for the emergency situations, because let's be honest, being a landlord is not easy by any means. There's a lot of things. What if you get that one bad tenant that trashes your property? Do you have the capital to be able to fix that property up, get it rentable again, and put that money back in? So the concept of like, I want to buy enough properties so the cash flow covers my income, you probably need a lot more than you actually think to be able to achieve that. So instead, maybe you have to be realistic with yourself and say, I need enough properties to be able to retire in 20 years comfortably if I sell those properties off or what have you. Not everyone's going to have the staying power to be able to build a career as an investor. And I think what you kind of said about that is like doing that audit will help someone really identify where they're at in that scale. Now,
Exactly.
if you're somebody who has a low income, maybe you make 40 grand a year, maybe it's easier for you to build that up. It depends where you're at, right? So, no, I think that
Yeah,
audit is a
it's
very, very
where you
good
are
thing.
in your time of life too. Like
Mhm,
where I am, I've got a shorter runway. So my risk tolerance is lower. And
mhm.
I'm tired already, so I don't want to be doing a lot more work. Well, a young person, yeah, they've got the
Yeah,
energy, they've got the time, they just don't have the money, so they're
yeah.
willing to do more active. While someone more my age might be looking at, I want to be stepping back now. I don't want another job, so maybe I want to look at something that is more passive,
Mhm.
or that I'm hiring. The numbers are there that I could hire other people to do most of it.
Yeah, yeah, it makes a lot of sense. We got one more question here. I want to really hit you hard with this one. And I want to hear that real what's that hard truth, that real hard hitting truth when it comes to raising capital that people usually don't want to hear. They come with that pie in the sky and you almost got to shut them down in order to save them. But you know that they need to hear it in order to grow. What's that one hard truth?
They have that idea that you mentioned before, if you build it, they will come. Field of Dreams idea that if I get the deal with the great ROI, people will just flock. I'm
Mm,
sorry, people won't.
right.
Right? You have to have built that visibility first, then credibility, then trust. And it doesn't happen in a month either. Someone that comes to me and said, Debbie, I've got this deal and I need investors now. Can you coach me to get the investors for this deal? I can't do it in a month if you haven't already got a foundation that you've built on
Yeah.
there. So it takes longer than a month to do that. But when you think about your job, that people go to school for 4 years to and then get a job, then go to all those interviews and convincing people to hire them. And it takes maybe another 5 years to be established as a expert where in your job, right? So
Yeah.
you've had 4 years of education, 5 years of actual experience in one company to start being recognized as an expert. When it comes to social media and building credibility, it only takes 6 months to a year. That's a way shorter runway if you do it correctly.
Yeah. Yeah. The learning curve is a lot lower, and you can build that a lot faster, but you have to build it right. Like, you have to do it the right way, the right
There's
foundation.
steps that you have to take, and trying to Frankenstein it is not going to work either. But
Yeah.
I'm going to go to networking events. I'm going to do some posts. I'm going to talk to some people here. I'm going to send out some emails. That doesn't work either.
Yeah,
It's
I agree.
actually a sequence of nurturing that needs to happen.
All right, and then final piece of encouragement. So we just did the hard truth. I want you to leave our listeners with something positive that they will feel motivated and ready to go to start raising capital, and then mix it in, throw in what you would like them to know and how they can reach you as well so they can start coaching with Debbie.
So you can start for a new real estate investor. You can start building your credibility right now. And for people that want to do this properly, it won't take more than 2 to 3 hours a week of their time. People think that all that social media stuff and all that nurturing and everything, that takes too long, Debbie. I don't have time for that. When you have systems in place, it won't take more than 2 to 3 hours per week that you have to
Absolutely.
invest in that to make and then you have a nurtured pipeline of people that can invest, and you will be making lots of money and helping lots of people from that. So that's the easy part when you're doing it correctly. All right.
Love it. Love it. And Debbie, if they want to start coaching with you, what's the best way that they can reach you and
I
start engaging with you?
I think just the same way, I'm not coming on here to sell my coaching to anybody that doesn't know me. I want you to get to know me first. So number one, I have a guide, 5 fastest ways to fund your next investment project. So I'll give you the link to that guide and they can download that. I
Yeah.
also have a free group where all my training is in there, my posts are in there, so people can start to see what I'm like as as a coach, and see, check out all my posts, check out all the training that I give. I do lives every week where you can learn a little bit of exactly what I'm saying. So, and it's in the guide. So that group is called Real Estate Investor Success Hub. So come in there, answer the few questions and join, and then join me on my lives. My lives are also replayed. So if they miss it and they're not available at the time, it's always there. And it's also the stack of training is being listed off in the guides. So that's the first place for anyone to start if they're interested, because I'm not ready to go on a call with you if you haven't already known me and start to build. I have started building trust with you.
And that just goes to show exactly who Debbie is. Like, she practices what she preaches, right? She doesn't want you to invest in her deal until she's built credibility. She doesn't want you necessarily to hire until you trust her that she's going to be the coach to do it. And I love that. I love that. So, guys, make sure I'm going to link all of that she just said down in the show notes. So you're going to be able to download her 5 ways that you can raise capital fast. So check that out in the show notes below. Also, I'll link to the Facebook group as well. So go join the group. I'm a member of the group, and I see Debbie going live all the time. I jump in when I can, and she's always dropping great wisdom there for you guys. Whether it's one small nugget that you pick up that suddenly changes everything, whether it's a little social tip to how to speak to investors, all of it adds up at the end of the day. take these small nuggets, get to know who Debbie is, and then again, I would say that you should definitely look into hiring Debbie once you understand what she offers and how she can help you build your portfolio. Debbie, I really appreciate you coming on the podcast here. We actually have Debbie speaking at our investors performance group meeting, which is next week. So if you're listening to this before March 19th, then great. Make sure you guys join us over on my other channel, youtube.com/Cameron Manning. Again, I'll link it below. And if you're listening to this after March 19th, then the link will still work. You can check out the replay. Debbie's going to be sharing with our investors live some tips that they can do to start raising capital. So I'm excited to have you for that as well, Debbie. Thanks again for joining us here on the Manning Up on Real Estate podcast.
Thank you for having me. And everyone, stay visible, get credible, and build trust.
Awesome. And again, guys, thank you so much for listening to the Manning Up on Real Estate podcast. Make sure you guys do what you need to do so the algorithm shows this to more people. Like, comment, what was your biggest takeaway from Debbie on the podcast today? And of course, subscribe to the podcast so you don't miss an episode. And we'll see you guys on the next one.